All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for taking the time out of your day to join me today and every morning, 9 a.m. Eastern Standard Time. It is 9:03 on Thursday, June 23, 2022. Let's rock and roll. Dow was up a little higher. It's up 73 points currently. NASDAQ up 76. S&P up about 0.48%. The Russell lagging behind up about 0.21% this morning. Crude oil is red. It's hugging that 50-day moving average here, the yellow line, as you can see. We've been talking about oil kind of pulling back, starting to test that $100 level. Very key. Again, I'm kind of looking at kind of low 90s, mid 90s. If we maybe 85 is your floor, but I think 90 is a support there. Again, I had a DM on Instagram today who was asking about oil, and I was saying about how we've been talking about it on YouTube in regards to falling oil. Again, it's just going to roll over just due to oversold conditions. It doesn't mean oil companies are bad or anything like that. No, I just think, as I was saying, I believe we were a couple of weeks ago saying that, hey, if you want to start taking a look at possibly taking some profits on these oil companies or oil plays, probably the best time to do so. Once we get to around 90, oil companies, again, right now they look attractive anyways. But again, when we pull back on oil companies are probably going to take a little step back. Again, just technical rebalancing in a sense, overbought conditions. Nothing to do with the fundamentals of the company itself. Just remember that oil companies had about, what, a 3-year period of just basically the lost sector that no one wanted to buy. And right now, oil companies are trying to get that money back in a sense. So we're one of the few companies that make money that the American people don't like is oil, even though they do pay dividends to American citizens. Not everybody, obviously, but yeah, when we see high home prices, if you're a homeowner, you love it. But if high gas prices for anyone, rich or poor, is not a good thing. So it's almost like we are okay with certain companies like Apple, Google, Amazon making billions of dollars, doing billions of buybacks. But if oil companies do it, I understand it's a consumer thing. It's more of a staple. But at the end of the day, let's have a little perspective in terms of oil companies. $5 gas is not going to last forever. It never does. I mean, I remember back during Hurricane Katrina, it was $4 and everyone freaked out. And these things happen. Same thing in 2009, 2008, where oil was 130. And then it sharply came back down. Guys, it's just cycles. Regardless if you get a gift card from the president or not, again, oil prices will fall, not because of any external factor, but just the market just does solve itself, as demand will probably wane as prices go higher, just the way it is. Gold is flat currently. Gasoline futures are up $3.75, up about 2 cents per gallon. Bitcoin is up right now, 20,540. That's where I have it. Ethereum, 1116 on the future side. Again, same deal with crypto. Been talking about it forever. I'll go ahead and bring up the chart again, but if you want to go ahead and actually see the video on YouTube, we did put a video up on regards to Bitcoin and when I bought. So let's go ahead and take a look at that Bitcoin log chart just to kind of refresh our memory. And you could see here we're trading at what, 12,552. A nice trend line here off Wix. And you can see once we got off that level around 18,116, we're holding up. So again, still holding up. I'm assuming, well, if I had to just kind of guesstimate, I mean, really can't predict Bitcoin. Crypto is a very difficult one to kind of predict. As we know, it's very volatile, trades every day, 24 hours a day. My first target would really be around 30,000, right around here. Now, again, if you went ahead and bought it at 18,000, you get to 30, hey, that's a pretty decent sized return. Again, you could possibly take some profits. Who knows, maybe we go ahead and retest this trend line. But again, higher lows, higher lows, as we could see. Remember, we came from 206 to around 4,066 to around 18,345. Again, as long as this trend line holds. But again, 30,000 being my first target. It's not like I'm going to sell. Just wanted to give you guys a heads up. And then after that, you have 40,000 as another reset, and then around 49. Again, kind of the tens, factor of tens, it seems like. Consolidation right around here, as you could see, right around that 40,000 level. We had consolidation around that 30. So really around the round numbers, we've been getting kind of near consolidation. So I think we get to 30 again, but we need NASDAQ to go higher as well. Bitcoin being, to me, a leading indicator of risk. If we see Bitcoin higher, chances are equities will be higher as well, especially the high growth tech names, the high betas, the Nasdaq would go ahead and benefit. Taking a look at S&P futures today, again, kind of the same deal. We know we're long. We know that. We talked about yesterday that inverse head and shoulders. Really, the key you're looking for here is that yesterday's high of 38.05. If that does break, guys, we have right here this week of 38.43. 38.43 again tomorrow being Friday. It was a short week this week. Again, really, nothing has changed. 38.97, 3900, our first gap fill in 4,000. I think we get to 4,000, and once we do, it's really, who knows? It's in the market's hands. Let's go ahead and bring up that chart. Let's see if we could bring up here my graphs. We'll go ahead and bring up this downward channel on the S&P, and you can see here again that bounce right off that trend here, right near 3,800 on SPX. Again, we expect to go higher, not exactly 39.26, but again, it was just for illustration purposes. So again, that has stayed the same. In regards to the market, not tons of headlines today, guys. I mean, kind of quiet. We have Powell speaking in front of the House today, the House Banking Committee. Nike announced that they're going to exit from Russia 3 months after suspending its operations. I don't know if that's going to really make a difference to anything, but again, that's up to Nike. I am a Nike shareholder, but again, I'm a big Nike fan, so that hasn't changed. If there's one thing I want to show you guys, and again, it's kind of a theory, and I talked about this with Investment Club. Let's go and bring up a chart, an interesting one at that. I was trying to compare both kind of the eras, 1982 to now, 2002. Again, 40 years ago. We had a new administration installing a new economic plan, beating an incumbent in the election, which was in 1980. And we had issues with the Russians. The Russians were in Afghanistan at this time. We had high gas prices. We had high inflation, a double dip recession. I mean, you could Top Gun was in theaters at this time in 1980 in the 80s. Bengals with the Super Bowl. I mean, it's correlation of the 80s, not exact. But let's go ahead and, just for argument's sake, let's say that 1982, we live in a simulation and we're just resetting to the 1980s. Well, here is 1981 to 1982 S&P. And I compared this so I can show you guys the year-end, the rolling time with the stock market now. So let's go ahead and give both a whirl. Just want to show you this. Again, just a theory. No big deal. Let's go to a line chart. And we're going to go to, this is the S&P running from 2021 to 2022, 1 year rolling. Let's go ahead and go to May or January 1st or January 2nd, 2021. And let's go ahead and edit this chart so at least we have a better view. We'll take away the moving averages. We'll take that out. And we'll go ahead and make this, yeah, it's fine. That should be okay. Let me go ahead and see if I can mess with this. We'll go to a candle chart. So this is a rolling period of the market. Again, January to June of this year. January to June, right here. January to June. And you could see this drop until July was right around 25.85%. Okay, let's keep that. That's top to bottom, peak to trough. Let's go ahead and add the loss that we've had since the top. And we can go from the bottom here. 24.5. 24.5% compared to 26. Pretty close, right? I mean, yeah, it could be a coincidence. But look at August. Again, all of this was high gas prices. All of this was a recession. All of this was a double dip. All of this was high inflation. All of this was high interest rates. All of this is a new administration. All of this is the old guy in the White House not knowing what he's doing. But Reagan figured it out. Things worked out. Employment bounced back. And we continued higher, even with a 26% drawdown. August would tell us right around mid-August, if we bottom, that we pretty much matched the analog of 1982. Now again, August, I'll know if I'm right or wrong. Again, it's not going to be perfect, but there's a lot of similarities in terms of the macro environment. Not exactly to the T, because in 1982 we didn't have as much federal debt as we do now. But again, it's interesting to see that this isn't the only time we've gone through this, guys. And America has come out better because we had an economic boom under President Reagan, one of the biggest peacetime expansion from 1983 with the end of the recession or towards the tail end of 1982, all the way to 1991, which when we had the next recession. Granted, 1887 we did have the stock market crash. So let's obviously have volatility, but we continue to grind higher. So the reason I'm saying this is the fact that where we are today is not forever, and that's both ways, higher or lower. In a bull market, everyone thinks it's going to last forever. In a bear market, everyone thinks it's going to last forever. Just want to give you guys some perspective. All right, guys, let's answer some questions. We talked about, oh yeah, we talked about yields. I'm sorry, one more thing, yields. I forgot. This is why I put the actual caption on the video. Look at yields come down here. Look at this, now 3102. Remember we talked about that 30 level. Put your alert at 30 level if you are someone that's in real estate, someone who's looking for property, someone who wants to lock in a refinance rate, someone who wants to lock in a loan. Right below 3, I would call that broker and see if you can get an updated price or updated interest rate for your mortgage. If we look at the 30-year mortgage rate, I'm going to go and Google it. Let's go ahead and see NerdWallet, today's mortgage rates. Here we go. Much easier. How about this? 30-year mortgage interest rates hit a new low. So we're obviously, this is according to Fox Business, and you could see that, okay, this is the trend. We went from 6 to 5.875. Again, nothing to get too excited about, but again, it's important to see if yields are going to come down with it. I'll go ahead and share this tweet with you guys, or this article on Twitter if you guys are interested. We're at G.A.R Capital. So let's see. This is old, obviously, but again, rates are still falling. That means bonds are being bid, and if bonds are being bid, then we know that it's definitely going to help those who are borrowers, because bonds are just credit risk. It's just credit. That's all it is. All right, let's answer some questions. Chip is asking, thoughts on Meta, strange action compared to the rest of the market? Yes, I talked about that yesterday in Meta and about Meta, excuse me. I did watch the interview with Mark Zuckerberg with his push towards the metaverse, and it was interesting. I kind of see where he's going for, and it kind of parallels a lot of things like a Kathy Wood, who thinks so far ahead. In this market, the market is not rewarding those who are thinking ahead. The market is rewarding those who are making money now. In a bear market or in a slowdown, again, individuals, investors, funds are going to be extremely picky on whether they're putting their capital to work, since their capital is worth more as the dollar goes higher and interest rates are higher. So again, I like Metaverse. I own Metaverse. I haven't even have an Oculus. I barely use it. But again, it's very cheap. But again, is it cheap enough yet? And yesterday I talked about the insider selling that's been happening with Meta and slash Facebook, formerly known as Facebook. Insiders meaning directors of the company, executives, the CEO himself. If they're selling shares and keep cashing out, why would I want to buy? And especially if they're insiders, they have material non-public information, or they have information that not everyone has, or they probably see the future not as bright as Zuckerberg talked about last night. Once I start seeing some buys from these executives, then I will definitely start taking a look at buying. But if the company's officers or executives are not themselves investing in their own company or actually selling stock, it doesn't look good. It doesn't look good at all. So that's probably, for the most part, why you have the weakness in Metaverse in comparison to the rest of the market. But again, Netflix has been down year to date. I mean, they're not the only mega cap in town that's down. It's just Meta's down more than everyone else. Bruno's asking, how was Zuckerberg's show yesterday, bullish or bearish? It's tough to say because, listen, I see his vision in terms of the metaverse. It's very forward thinking. Is that going to help the stock today? No, it just doesn't. Again, do I like the future prospects of a metaverse? I do. I do. Does it mean I want to buy now? No. And the reason I don't is because when I see the officers of the execs and the officers of the company start adding and start buying, hey, for all of SoFi's stuff in terms of their stock performance, the CEO is buying the company. Take a look at CRM, which is Salesforce.com. Mark Benioff has been selling shares aggressively almost daily. If the CEO is selling shares, why would I want to buy them? There's got to be something that something that I'm missing. Eric is asking, back in 2020 when Corona started and the market corrected itself, I made money but didn't go heavy in puts. This time around I went heavy in NVIDIA puts, still NVIDIA puts, up 26K. There you go. Well done. Well done. It depends on how long the puts are. If you were talking about short dated, it just depends. But if you went long dated, very nice. Premiums can just be a little expensive since it's based on stock price. And we do have Google doing their stock split next month in July, which is just next week. I believe July 13th, if I'm not mistaken. And again, I have not bought into more Google as of yet. The only thing I'm doing today is buying more SPY G. What's the number SPY needs to overcome for us to go long? 4,000 is the S&P, so I'm going to go ahead and say it's difficult to say overcome, like because that could be reversed at any time. Remember in March in the S&P, let's go and bring up SPY. That'd be a lot easier to break down. All right, let's go ahead and bring up a 3-week. And if you remember, guys, in March, we did have that pop all the way down, what, to 45, 458, let's say 45.80. And then we fell. So again, you could have another pop to a 408, which is the 100-day moving average, and just roll over. Again, what's really the key here? We got to see inflation come down. We need the Fed to pump the brakes at least and let them see that we're going to have at least slowing inflation, that things are going to get better. Or we need some kind of fixing up in Ukraine and Russia. That needs to end. That's really the only thing that's going to stop the market from rolling over. And again, all of this is just a reflex bounce, filling gaps. That's all. Does it mean stocks are more attractive today than they were last week? No, because the price is a little higher, so it was more attractive when they're down. But in terms of going long, yes, I still like to 4,000. After that, it really just depends. We got CPI, PPI next month. We got non-farm payroll. We got the Fed. It never ends, guys. Over and over and over. Waiting on to buy Amazon, Tesla, and Nvidia. Hard to time a bottom, but I feel we have more room to the downside. I agree. In that regards. And again, my level is 3,500. 3,500 again, and I brought up an interesting chart too on the S&P. Let me see if I can bring up that chart here. I can bring this up for you, and this will give me. So we did the downward channel on SPX as we talked about. I'll bring it up again for you guys so you guys could see it. And again, it's just an oversold bounce. Nothing to be too excited for. 4,000 is that gap fill. If you go ahead and move a little more to the right, you see that apex right there, right where the meeting of the price and the downward channel. And again, we've respected it a couple of times. Could we break out of it? I guess you could say, what price will I say that, wow, things looks like we're breaking out a trend? Would probably be around 4,200. 4,200 right around here. Let's say if we just continued higher and we ended up here, this might create a new base with 4,000 being our new support, and then we could grind higher. Shoot, for all we know, things can be fixed pretty quickly if that does. You never know. We get a peace in Ukraine and peace in Russia. We can get an automatic just soar job right away, and then we can probably make our way higher. There's a lot of price targets that have been made by JP Morgan and other investment banks that we may just get up to break even by the end of the year. Imagine all of this price action just to end up break even at the end of the year. That would be insane. Possibility? Sure. Hell, I was watching Doctor Strange last night, the multiverse. There might be different multiverses where we're now pushing at all-time highs and then we're finally falling lower. Who knows? Again, Marvel nerd, right? I thought the movie was great. All right, guys, we'll leave it there. Have a great rest of your afternoon. I will catch you guys for the aftermarket recap later. And again, just watching the market. We're expecting to go higher. I still have calls. I'm still long futures. And again, we'll see where we get to. The key level here is 38.05. If we can get to 38.40, then things will get really interesting because then we'll definitely trek higher. And probably by that point, I'll probably add to some risk by going along NASDAQ or so. Have a great one. We'll catch you guys later on today, 5 p.m. Eastern Standard Time. Cheers.